Jim, I want to talk a little bit about your reference to inflation concerns with respect to these liquidity operations and stimulus packages being put not only by the United States but by economies and governments around the world. When we talk about huge deflation, and you seem to agree that we are looking at a lot of forced selling and therefore deflation, do you really think that this cash is going to create an inflationary problem when we're looking at perhaps the biggest deflationary spiral we've seen in several generations?
Well, you call it deflation, but if stocks are going down, that's not deflation. That's deflation of the stock market, yes. And commodities are being sold, too, because there's forced selling. But, Martin, throughout history, whenever you've had gigantic amounts of paper money created, it's led to inflation down the road. Sure, things are going down now because of forced liquidation. I mean, AIG went bankrupt. Lehman Brothers went bankrupt. A lot of people are redeeming and being forced to sell everything. That's not deflation. That's temporary. All this money being created is going to lead to inflation down, at least it always has.
Jim, it's not just stocks that are falling, and AIG didn't go bankrupt. They haven't filed for Chapter 11 protection. You know this as well as I do, Jim, and this is the reason we got into this problem in the first place. House prices are declining. Commodity prices are declining. Gold is off its high that it printed in March. It's not just stocks. It's everything. If that deflation continues, inflation isn't going to be a concern. The global health of the economy is far more principal for those at the central bank level than anything to concern about inflation 10 years down the road. The house is burning. It needs to be put out.
Martin, why did AIG get taken over by the government if they weren't bankrupt?
All I said was that they didn't file for Chapter 11 protection, Jim. That's bankruptcy. They're still running. The business is being run off, but it's still a business. People still turn up at work. It's not bankrupt.
I understand, but they're being forced to liquidate everything. Everybody's being forced to liquidate everything. Yes, houses, commodities, and stocks are all being sold by everybody because they have to. This is a temporary thing, unless the world's coming to an end, Martin. If we're now going to have perpetual worldwide decline, then, of course, that's going to be difficult. But even then, I'd rather own commodities, by the way. I'd rather own commodities than be short finance or be short Toyota or IBM or Bank of America or something, rather than to be long stocks. In that kind of scenario, you're right. Everything's going to suffer. I'm of the view that the world's going to recover someday, and with all the money that's being created, history has shown it has always led to inflation. If it's your view that it's leading to deflation, then obviously you should be buying bonds and selling everything else.
Hi, Jim. It's James Stewart in London. Like you, I'm a paid-up member of the Pessimists Club. But I've got a question for you.
Wait, James, excuse me one second. I'm not pessimistic. I'm wildly bullish on a lot of things.
Yeah? Not too many things.
Go ahead.
But anyway, whether or not that's true, I've got a question. You talk about recovery sometime, but I'm not sure what you think policymakers can do that they have not already done. What steps need to be taken by the central banks and by people like Paulson to remedy these circumstances, even if it's over the longer term?
Well, Paulson and Bernanke should resign is the first thing they should do. They should abolish the Federal Reserve and stay out of the way. Let the market take care of this. Bernanke claims to be an expert on the Depression, the collapse. You know, he doesn't know what he's doing. Milton Friedman's wife, Anna, wrote an article recently saying, you're doing the wrong thing. You didn't get the lessons right. You got a PhD in economics, but you don't understand what's going on. They should stand out of the way. They should let people collapse. The Japanese in the 1990s would not let anybody fail. You remember the term zombie banks and zombie companies? They still talk about the 90s as the lost decade. It's 18 years later, James, and their stock market is 80% below, or 75 or 80% below where it was 18 years ago. This policy has never worked. The Americans tried it in the 90s. The policies which have worked, let people who make mistakes collapse, let people who are competent take over the assets from the incompetents and start over. Now what's happening is the governments are taking the assets from the competent, giving the assets to the incompetent, and saying, now you compete with the competent.
Jim,
this is not going to work. I mean, this is madness.
Jim, you raised this issue yourself about not learning the lessons of 1929. That's exactly what policymakers did. They let the banks fail, and we had the most protracted global depression that we've seen in 200 years. Surely that is the principal lesson. Don't let the banks fail, and then sort out the rest of the problems beyond that.
What happened in the 1990s was there was, the 1920s and 30s, there was a huge liquidity crisis, and Milton Friedman and his wife studied it all and demonstrated. The central bank sat back and did nothing. Instead of letting the credit flow to the banks and give them liquidity, they wouldn't do it, and so the banks failed because there were runs on the banks. Everybody took their money out. If the central bank had pumped money into the banks then, but that was then, Martin. This is not 1929. Look at your calendar. Watch CNBC. This is 2008.
Jim, you brought up the comparison. I didn't. All I'm saying is that if you are going to raise the issue of 1929, at least get the lesson correct. You are spouting things. You are telling our viewers things that are factually incorrect, and it is my job to pull you up on it. The banks failed because the government didn't react in 1929, and that is part of the reason that we had that protracted depression. Now, I didn't bring up the comparison. You did. That is why I made the point.
Well, if we're talking about factually correct, most of you on CNBC don't get things factually correct. As you know, you're always saying buy.com, jump into the stock market. You're hyping the stock market all the time.
But what happened in 1929 was what
happened in 1929 was, as Milton Friedman and his wife demonstrated, there was a liquidity crisis. People took their money out of banks, and if they'd given the banks money and liquidity, there wouldn't have been a problem. That is entirely different from what's happening now. Now you have banks having made horrible loans, having terrible balance sheets, and instead of letting them fail, which Friedman and his wife have demonstrated would be the solution now, the American government and the British government are propping up zombie banks. That's an entirely different thing. So if you want to talk about facts, Martin, let's talk about facts, okay?
Quick one from AC, who writes from Switzerland. He says, I own a fund heavy in energy stocks, particularly mid-sized producers and oil patch service providers. I've written it down, and of course it's lost about 50% of its value. At this point, would you just keep it and wait things out? I don't need the money yet, but don't want to sacrifice a good long-term investment. What do you think?
Well, I haven't sold any of my commodities at all, or energy. I own a couple of oil stocks, but not many. Mainly I own oil itself. What history has showed is that the things which come out of periods like this with assets unimpaired are the things which will do well. The oil bull market started in 1999. 3 times since 1999, oil has gone down 40 or 50%. Every time it turned around and went back up. This is the 4th time oil has gone down over 50%. Is it going to turn around soon? I don't know. It looks like we're having a selling climax, but selling climaxes can last a while. But normally if you have a selling climax, the things that come, normally when there's a selling climax, it's a time to buy. I started buying, it's too early, obviously. But when you have a selling climax, you own the things that are going to do well no matter what. And in my view, energy is one of those things.